Good morning to all traders and welcome to this Tuesday's Market Insights video provided to you by Orbex. We are seeing actually both the euro and the pound trading higher. One would have thought after Boris Johnson's rejection to continue talks, intensifying talks on Monday evening, that the pound would have fallen. But the situation is not like that because we have a fallen dollar. And we have a fallen dollar because the Pelosi's deadline for actually today's deadline for a fiscal package stimulus deal to be agreed pretty much is not really going well. There is no clear signs of progress. There is political uncertainty at high levels, obviously, and there is also one of the biggest concerns, one of the biggest worries is that the effect of the previous stimulus package is also wearing off. Right now, on the European side, with increasing restrictions and Brexit uncertainty and the standoff between Manchester and the government regarding the new restrictions that Boris Johnson wanted to impose due to the increasing cases is not really going down well either. So most likely we are gonna get volatility remaining at elevated levels until at least the November 3rd, which by the way, hopes of a stimulus package until then are really narrowed down. So we would have not only to have Trump coming up with a potential even smaller size stimulus package, but also we would have to have Democrat support, and that's not likely to be the case, as you probably well know yourselves. Now, starting off with pound, I mean, I'm waiting for another move to the downside because I'm looking at this as the last wave to the downside, right, to complete this bearish move to the downside. I'm looking at this wave A, then we're expecting B and C in the longer term. Now, last time we talked about this possibility of having ended the impulse down here and also having ended wave 2 up to the 50 Fibonacci retracement of this move to the downside. Now, with the triple zigzag here being done, we were looking at this potentially start moving lower down to at least the 125.50, which is a 61.8 Fibonacci extension of waves 1 and 2. However, this correction is really telling me that this will continue being a correction, right? Which would suggest two things. One, this could be a W, X, and Y, okay? Or it could be a case where we'll have W, X, Y, X, and Z. So it is very likely that is going to continue remaining within the 128.50, 130.60 range, okay, until we get more clarity or even until perhaps the elections, because a stronger dollar or a weaker dollar is definitely going to create a breakout here on the pound as well, right? Now, if and when we break below the 126.40, we'll be heading for 122 for then a simple correction and perhaps down to wave A, because wave 2 is quite elongated sideways market, so we expect the wave 4 to be a sharp one, right? The potential to the downside, of course, is below 114 previous low. The other scenario was looking for pound is that this is just an impulse to the upside, and we are just doing an ABC here, and then we're going to start moving higher. That would, of course, be an alternative scenario in case Brexit talks resume after yesterday's disappointment, and not just only resume, also bring something good on the surface. I'll quickly go on euro dollar and then dollar yen, and that will be it for the day. I'm still looking this as an expanded flat. Wave 1, 2, 3, 4, 5, ABC, and then we are actually moving higher again. We've done 1, 2, 3, 4. It's going to be a 5, and then potentially another correction down here before we continue moving higher. Obviously, the potential here to fall further down is also very likely, but this is my first main scenario For the second scenario, I'm looking at this move to the upside, having ended up here, right? Which means now we would be heading lower down for either wave X of a triple zigzag or to continue the impulse to the downside. In either case, I would be looking the break of 116 first, and then the break of 114.28, and then of course the break of intermediate wave 111.45, to consider this is even a good sort of scenario, because a break of wave 1 could take us to 106 or so. Now in dollar yen, it's moving exactly as we expected. We're expecting A, B, and a C up there, right? Triple zigzag. We're expecting an A, B, and we're expecting a C. This is 1, 2, 3, 4, and 5, right? Now what this is mean, this is a correction. We're going to see 1, 2, 3, 4, 5 again, and then either a correction and a continuation lower down for wave Z, or we're going to end this move to the downside, and this is, instead of correction, is going to be an impulse to the upside, and we are going to expect then this trend line to break and offer opportunities to the upside around the 111.70. Now I'm looking as a low the 103.40 or so, because it's a cluster, it's a 100 Fibonacci extension of waves A and B, and is also the 78.6 Fibonacci retracement of wave A. So this is the other pair I wanted to look at, and its alternative is this is a triangle which probably have ended down here, right, for wave B, because it's an A, B, and a C. What we would be wanting to see continuing is prices remaining near this level, then falling back within for an extended wave E down here, right? If we wanna, if that is not wave E, or in case we're not going to see prices actually, sliding back within the triangle, then most likely this means that this wave E is done down there, and this is 1, 2, 3, 4, and 5, and this is a new impulse move to the upside. So I want to thank you for watching, and of course, if you have any questions, do not hesitate to comment. I will get back to you as soon as I can.